If you know you've got 3 people that you need to bake all the muffins, it'd be pretty hard to not remember that you've got to pay them a salary.
So why is it operational expenses, not just expenses? It's because we separate the operations of the business, running it, from the product expenses. And that's why 60 cents of beans and 10 cents of milk turns into a $4 coffee. We've got to pay for the rent of the cafe and the wage of the charming barista that makes it for you. And again, we do some assumptions and maths.
Understanding operating expenses can be a bit tricky because sometimes you don't know what all the expenses are that you're going to have. So the operating expenses are really all the different things I'm going to have to pay for to run my business at the end of the day. So the biggest type of operating expense is typically your staff costs or your labor costs. And again, figuring out how much you're going to be paying for staff, you need to break it down to the simple building blocks. You need to figure out how much time you're going to need in labor. If we're talking about our muffin and coffee stand, we know we're going to need people to bake the muffins and brew the coffee. It might be one person if it's a really small stand. Say I need 20 hours of labor a day. So maybe it's 2 people on 10-hour shifts or 4 people on 5-hour shifts. It doesn't matter. How much labor do I need? How much will I have to pay for that labor will give you your labor expense.
You've probably noticed that wage costs are an absurdly large proportion of any business. You kind of can't get away from it. This is why cutting jobs is such an attractive thing for management consultants in big companies. You save a huge amount of money really easily. It also shows us why it's really smart to make every hour of employee time count. So an expensive bit of gear like a nice laptop is going to be infinitely cheaper than having a staff member take a long time to do their job over the course of a year.
That's right, the best way to start is to get a very comprehensive P&L with every conceivable line item you could have for, different expenses incurred in running a business. Stationery, magazine subscriptions. It can be very small line items, but whatever it is, you can go through line item by line item and figure out what else you need. Maybe if you're making muffins, you want to buy new recipes every month. That's got to be paid for somewhere. That's part of your operating expenses. A good place to start is looking at a profit and loss statement from a similar business that's quite detailed, almost like a profit and loss ledger that actually goes into building up your financial statements. You can find that by going to talk to someone else in a similar industry. You can even find examples of operating expense budgets online. So you just have to think about how those costs relate to your business, and you also need to think about how those costs will change over time. If my parents are letting me use their garage to bake my muffins, but I know they're selling the house in a year and I'm going to have to find other premises, I will need to start budgeting for rent at some point in time. So once you've gotten to this point in the model, you know your revenues, you know the cost of goods sold, which tells you what your gross profit is. We also know our operating expenses. So if we take our gross profit and deduct our operating expenses, we get something called our operating profit, or EBITDA, earnings before interest, taxes, depreciation, and amortization. What does the actual operations of my business give me as profit at the end of the day, based on how much revenue I've got, what it actually costs me to sell my product, and then all the other costs that go with marketing that product, paying for the staff I need to make the product and sell that product, and all the other expenses that go into running my business. The profit at the end of the day flows to you if you own that business, so you might think I don't need a salary because I'm getting, $40,000 a year of profit from my business. If your labor is required to generate that profit, it should be included as salary. If something were to happen to you and someone else were to take over the business, they would have to either do that job themselves or find someone else to do it. So it is a cost of the business.
Okay, so we've just totaled up our wage costs, our operational costs, and a little like 10% contingency, and minus that number from our revenue. which finally gives us the most important number in this spreadsheet: profit.
So at the end of the day, before taking into account how you've chosen to finance the business or whether you'll pay taxes or not, how profitable is it for me to operate my business on an ongoing basis? That's effectively what your EBITDA tells you.
This is a really exciting number, not just because you get to take the money home at the end of each year, but also because it's the number that a valuator uses if you sell the business. We'll get to that later.
So if you get to this point in the model and you've really figured out your model's not profitable at all, it might be a bit disheartening. But all I can probably say is better to find out now than after you've gone and raised investment for your business or mortgaged your house. And a lot of early stage businesses pivot. It's very common, and that's really the job of the founder and the entrepreneur, to figure out how do I best chart this course. And what a model lets you do is figure out how the different strategies will look in terms of the numbers and the overall profit for the business.